tomorrow is election day, and not sure if this is happening on your brokerage, but TradeStation has adjusted intraday margins ahead of the expected volatility, not only for November 5th, but also November 6th. So I thought I'd bring you along for my pre-market prep that I'm doing here the evening of November 4th, getting ready for November 5th action. Now, I have a futures trading lab with my S&P Pro members, so we'll be live in front of the markets on election day morning. And then we have a monthly group coaching live on Wednesday, November 6th at 4:30 Eastern. So I'm going to dive into this ES chart and just kind of take you along as I prepare for tomorrow's session. If you're new here, I'm Reddy, and I use price action, candlesticks like these, market timing, and that's forecasting, as well as momentum, my favorite indicator of the RSI power zones, to boost my trading and that of our tribes. All right, so I've got here the E-mini S&P 500 futures December contract on a weekly chart. And you can see that we have been correcting lower off of the week ending October 18th high. Now, this is with the RSI power zone sort of dancing around in the neutral zone. However, there is a little bit more room to weaken on the weekly chart. And you can see, I don't know if we'll reach it this week, but there's room, okay? Not guaranteed, but room to get down to this 5580 area. So I keep my different time frames on different tabs. So now I'm just going to switch over to the daily chart. So here I have a little bit of different information. I have the retracement of the latest move from September 6th to October 17th. So you can see that some nearby support there is 5689.25. You can also see that on Friday we had an inside day range. And some may say, oh, well, that's a harami candle and it means we're going to rally higher. Well, that's the thing about candlesticks, is you have to watch for confirmation. And I teach about how I watch for confirmation in my Gann candlesticks trading system. Interestingly, the session that wrapped up today, November 4th, was a doji candle. And if you're not sure when you look at a doji, if it's a doji, just make your candles really tall. And if the open and close are super close together, that's how you know it's a doji, right? They don't have to be exact same, but the more exact same they are, the more of a doji it is. All right. So we had a nano large red candle, an inside bar, a doji breaking the low, and we have, bigger picture, some bearish pressure remaining. However, there are some barriers the bears would have to get through before they could push down to 5580. So back to the daily chart. As you can see, the 50% retracement of the entire recent advance is at 5689, call it 5690. And so that is an important support level. That's also near an actual traded level. So there's levels we calculate as retracements or projections, and then there's actual traded price history. And traded price history is always, to me, more important and substantial. Okay, the last thing I'll say about this daily chart is it has been on the RSI power zones weakening since putting in the October 14th peak and then having a bull bear RSI face-off between October 18th and October 14th. Classic, right? But look at where it is now. We returned to the bull support power zone just inside it at 40.08, which the last time we were at that comparable level was the September 6th period. And while it's not confirmed yet, there's potential for a minor bullish divergence unfolding. That's something I teach in advanced RSI power zone system. Now, I'm just observing what I see, okay? I didn't practice a dry run and then come film this. I'm just doing it real time as I prep my charts. So when there are methods or techniques that I know I teach in my courses, I'm just mentioning them, okay? Just letting you know, you can always go to my website or keep an eye on your emails for what it is that you want to dig into now or what I have on a special or anything like that. Okay. Another thing I'm seeing here that might be useful, not necessarily tomorrow, but in the longer term, is adding in a trend line. Yes, okay. So I saw that the high from September or October 17th to October 25th connects on October 30th. So this will be a useful guide if we start to get recovery. All right, now we'll go to my 60-minute chart. And fair warning, it's going to have a lot of annotations. It's going to have a lot going on. That's because it's the main time frame for my analysis. I'm going to move through updates on it and kind of give you an inside scoop to what I'm seeing. So here's my 60-minute chart, okay? This is the one I publish in my S&P Edge Pro report. Now, in order for me to update this chart, I've got to put up on a side screen my actual draft of my report and get ready for the next day. So I'll do that. Okay, so on a different side screen, I have the draft of the report. So I copy out the text from the report I wrote this morning so I can make a template for tomorrow's. And I'll start with prior commentary updates. So on Monday, November 4th at 8:32 a.m. Eastern, so that would be hour ending at 9 a.m. is this candle here. So I'm going to move my gray vertical line to the hour ending at 9 a.m. Okay. I wrote, so at this gray vertical timeline, when none of this other stuff had unfolded, what I said was, quote, during the overnight, futures have been consolidating. That was all of this action right here. Friday's session posted an inside bar range, which represents indecision in the market. Therefore, futures are at an inflection point. If they trade higher from current levels above 5776.5, that would promote 5803.75 initially. If futures trade lower from current levels below 5740, that would reopen 5732.5 ahead of 5725 to 5724. So when I, as an analyst and trader, see that the market is giving me mixed signals, I don't try to pretend that I know what's going to happen. So every now and then in my reports, I will say, hey, look, we're at a decision point, an inflection point, and I'll give my traders both sides of the coin. And in this case, that was helpful because even though it was the second part of my inflection point analysis that came to, it followed the levels exactly. So let's follow along and I'll show you what I mean. So first I'm going to just remove some older levels in analysis that aren't relevant to what tomorrow's report might bring. I'll still make sure I bring in my little label here, okay? And now I'm going to update the levels on the chart. So from this high, so I'm going to get really zoomed in so you can see how to update violated support resistance levels. The first thing I'm going to do is remove 5747.88. I'm removing it from the chart and I'm removing it from my draft where I have the levels listed. Then I'm removing 5740, but for 5740, because I talk about it in the report, I'm going to remove the line, but I'm going to label the level with a gray font. See? So that way, when I come in tomorrow to trade, I can remember that was a level I talked about. Same thing with 5732. I'm going to remove the line, but I'm going to label the value that had that. And look how beautiful this was. I had said we would be falling lower into 5725.25 to 5724. Boom, we came to 5724.25, one tick beyond my final level, and the market bounced. This kind of thing happens more often than you might think. I don't have a crystal ball. I've just been studying, analyzing, trading this market for on and off for 24 years, okay? So I'm going to remove all the supports from my table, 5740, 5732.5, 5725.25, and 5724. I'm just going to take them off of my list. And, well, actually, I won't remove 5724 because that one didn't get violated, okay? But I'll remove this and this upper pink line. Okay. So now, tomorrow I will adjust all these labels to put them in a nice line. I move them by hand. It's a little painstaking, but it's worth it because using the trend line segment like this in TradeStation or any other platform, TradingView, whatever, it allows you to see the origin point. If I just crow on a horizontal line like this, it's hard to know where the origin point is. Okay, so I've updated the levels by removing the ones that were violated. Now I need to write a recap for myself. Okay, the outlook I will write in the morning. So my recap is this. Futures traded lower to, and I'm going to kind of talk about the pathway, 5738.5. So I'm lower beneath 5740 to 5738.5 by 10 a.m. Eastern. It's an hourly chart, so I'm not going to be worried about the specific minute. They recovered to, that's the high right here, 5768.25 before declining once again. Trading below 5732.50 and I like to put like what that was. So I'll go to the daily chart and I'll say, okay, that was the Friday, November 1st low. Down to $5,724.25, just one tick ahead of noted support at 5,724, Wednesday, October 2nd low. Now I want you to notice something. I don't just look at levels for the date. I am a short-term day trader. I always look at the levels and the days of the week they happened. If you do this, no matter what you trade, you may start to uncover some tendencies, okay? They're not something to like bet the farm on, but they can help. All right, so now that I wrote what happened, okay, this move lower, this move higher, this move lower, I'm going to now add in some resistance and support levels, and the rest I do in the morning. So the final step here is, okay, let's look at the levels we had. 5776.5, 5776.5, that stayed put. Now we have a new resistance. And there's a couple here, but I'm gonna focus on the most recent, 5771.5. Then I have to go and add it to my table that's gonna be in my report, because I don't just label the levels, I think about where they were, right? So 5776.5 was not an intraday high anymore. It is Monday, November 4th high, and now I'm adding in 5771.5 intraday lower high. Now, based on this overnight action, that's about where I leave it, because I don't like to spend a lot of time and energy labeling a bunch of levels in the evening, only to come in the morning and see that they've been removed. So this is good enough for me. The area where I focus is in the report, you know, how many resistance levels up do I want to talk about? And I probably will only want to talk about the action up to this 5893 at the highest. If this was just a normal Tuesday, I might kind of limit my expectation of upper levels of trading to this 5838 or something. But it's election day, so who knows what's going to happen. All right. I also want to not be biased on my chart, so I try as much as possible when I ultimately publish the report the next morning to put the current action sort of in the center, and then make sure I'm acknowledging support and resistance levels sort of equidistant, okay? So again, all of this I'll tidy up in the morning because more bars will have unfolded, but I'll have a straight line here of the labels. I will amend any other further analysis. I'll obviously look at the weekly and daily timeframes, and I will also study the VIX. So I look at the VIX on daily chart, intraday, and I'm starting to use a new indicator from my friend that I've been sharing with you, my friend Bill, called the VIX Wizard. That's just my little tag here for my TradeStation windows to trade that indicator, but it's available in TradingView, which I have set up separately. So hopefully that helps you see how you dig into your charts after any sort of market action. This kind of technique applies whether you're trading the ES like me or you're trading anything else and you're day trading. So I'm going to end up doing this analysis a couple times, right? I did this evening analysis. I'm going to then wake up and like literally after I brush my teeth and have water, I analyze the market again. And that's usually when I publish my research in the S&P Edge Pro. Then I take a break, have breakfast, do some other things. Then I come back and get ready for the market open. So I'm coming to the market a third time, all before the 9:30 open. So this is what I do. Hope it helps. So that's my tour. We'll see what this election brings. No matter who wins, it's going to be a very interesting time. So lots of opportunities to be had. But of course, trade per your plan, watch your risk reward. And remember, there's no urgency to do any trading. It's a perfectly good time to kind of just study, brush up, get your foundation solid. So if you're checking out this video and you made it till here and you want to let me know that you got value in it, please go ahead and hit a like on this video, drop a comment down below, let me know what insights you had and any other markets that you would like me to look at, and I'll catch you soon.